Investing in biotech, what it takes. So Hugh is the chair and founder of Private Portfolio Managers. It's a boutique investment fund started in 1995. Hugh is the chief investment officer of PPM, and prior to that he held various roles in analytics and management roles at various Australian investment institutions. So thanks, Hugh.
Thanks very much, Sam. And thanks very much for the invitation to come here today. I think these sorts of events are very important for the biotech sector. It's a sector that really needs to have its profile lifted, and these sorts of days where a variety of people come together that can exchange information and develop connections is pretty important, I think. I wondered what I was actually going to say about investing in the biotech sector. PPM's really a generalist investment manager. We have a widely diversified portfolio, global and domestic equities. So unlike Bianca Ogden, who I think spoke here last year, we're not a biotech investor as such. So I thought what I'd do is perhaps try and put in perspective some of the thoughts that general investors bring to the sector. How do they think about it, and how do they approach the specific problems that investing in biotech throws up? A lot of this the talk may sound a little bit filled with difficulties and perhaps a little downbeat, but it's very difficult to get people to invest in sectors that are not well known, and in times of difficulty, it's very hard to get people to invest at all. Every fund manager is very happy to forget 2018. It's a process that requires a lot of development, I think. A few observations. Australia's got a very vibrant science environment. There are a lot of people doing a lot of science. There's a lot of universities, a lot of research organisations. There's support from the federal government in various forms. But there's very little activity in the capital markets that runs parallel to this. If you were to compare the Australian sector with a very developed environment in the US, there are lots and lots of specialist funds that cover particular areas, that cover particular stages. There are teams of analysts at investment banks that cover the sector with a great deal of thoroughness. In Australia, that doesn't exist. You look at the sell side. There are a few analysts that have to cover a variety of things. They may cover the biotech sector, but they've also got to do industrials and hospitals and various healthcare sectors. So there's very little specialisation, and there's very little really authoritative research that is produced by the sell side. On the investment management side, it's very hard to raise specialist funds. You need a certain size of fund for the fund to be viable in itself. To employ specialist analysts, specialist fund managers, there needs to be a certain volume of funds under management to make it at all viable. But that's the situation. And the resources sector has dealt with this. There's a vibrant sector of many analysts, many fund managers who've got deep knowledge of the resources sector. And there are a lot of similarities in many ways, particularly in the exploration and development stage of the sector. You've got the same sorts of risks, you've got the same sorts of time frames, you've got a lack of significant quarterly information that's produced. So it's and that's a sector that's grown and is has become a global operator. But so why put all this work into developing a sector? Well, I mean, the Australian share market is very narrow in the range of industries that it has. There's very little real diversification. There's 4 banks, 2 mining companies, a couple of grocers, etc. But I mean, there is a sector. We've got medical devices, Cochlear and ResMed. There's a biotech sector. There's something like 90 or so listed companies. There's CSL, etc. But there's not enough capitalisation currently to support an ecosystem that provides investors that are not specialist in themselves with the sort of information that gives them the confidence to invest. So that I think is perhaps the current picture, but it's a very, as I mentioned, it's a very valuable diversification for Australian funds, and if there is to be a more diversified and mature market that Australians and Australian institutions can invest in, that's a very valuable process that could occur. So what are the problems with the sector that we would see as a generalist fund manager? It's very high risk, but that's okay. If the risks are numerous and you're not faced with a binary result all the time, if there's a wide variety of risks that you can diversify, then that's an approach to dealing with the problem of risk. The sector does consume capital. It's not expected to be cash flow positive, to make profits, to have returns on equity, etc., in the way that the industrials or financial sectors might be. And I guess that's a sort of a mindset that has to be understood by investors, that it's actually not that most of the biotechs are not going to produce themselves the end product. They're going to partner and with major companies to develop the things, and what they're producing is IP, and that's the value that they're adding. The second problem that I would see is that it's a global industry. It's not Australian biotech. It's biotech, and that means that the amount of information that one has to get across is enormous. If the company you're investing in is seeking to partner their product, it's not. Their competition is not another Australian biotech. It's a global set of competitors. So you have to. There's a large amount of information that's required to be covered. time perspective is very long. But that's something that the resources sector has come to deal with. It might take over 10 years for an exploration target to become a mine. And I guess the resources sector has developed an understanding, or in the investment community, developed an understanding of what the stages of exploration are, and there's a greater understanding of how the risks evolve. And that, I think, is probably one of the things that needs to be understood more better by investors in Australia in the biotech sector of how the risks evolve. Valuations, how do you go about valuing companies? That's sort of very much an art more than a science. But again, it's something that has been developed in other industries and accepted. Early stage exploration is there are certain sets of parameters. Maybe that equates to preclinical. There's a development of how one thinks about the stage that the company's at. It's probably an area that also requires a greater level of esoteric knowledge. In banking, industrials, media, etc., there's the training of analysts is perhaps a less demanding process. There are lots of measures that analysts can quickly learn with to form an opinion of mature companies, and that's probably a more difficult thing for in the biotech sector, where a level of training in the sciences requires a lot more investment in time, I think. So how would we approach these problems? I think the obvious one is diversification. If you've got a highly risk, individually investments are high risk, but in totality that risk can be reduced substantially. So, I mean, I suppose the approach that we would think of is that you'd cut it down into various sorts of risks. You might put a certain amount of the portfolio into companies that are in phase 2, a certain amount into phase 1, some into preclinical. You might also divide it then again in various areas where you think different sets of or different levels of risk apply, and perhaps in cancer research the risks are lower than in neuroscience. So you might say, well, the successes in neuroscience are fewer and far between than they have been in cancer. So you might develop a framework that kind of breaks down your risks into sort of manageable portions. And valuation, I suppose, is the other thing. It's extremely difficult to form any really coherent valuation form that you might have for an industrial or financial sectors. So it's perhaps you've got to acknowledge that the valuations may change very substantially over time. So that's perhaps a difficult thing that you've got to come to grips with. But it's I guess part of the in a portfolio where there's a budget for risk. That's part of the equation. I suppose so why would we spend all this time and take all this risk on? These are areas where the returns are not highly correlated with so many areas of the Australian market in particular. And also the potential for return over the last, if we take the mature markets, the returns over the last 10 years in the biotech sector have been nearly twice that of the S&P 500, and over the last 20 years have been nearly 4 times. So there's an underlying reason why you would look at the sector. It's a very historically there's been a very high rate of return compared to the market in general. So there is a significant reward for getting the approach correct. So I think what I suppose the point that I would most like to make is that this is a very valuable part of the Australian economy. It's one where there's a significant benefit, and it's one where the capital markets have really not been terribly supportive. I think it's an area that health is a very emotional area. Anybody who's had family or loved ones adversely affected by a condition is very often compelled to do something about it. And you can see from the activities of charities of cancer and various other charities, there's an incredible support for efforts to try and deal with problems. In a way, the biotech sector is kind of in competition with charities for capital. I would often say that if you really want to do something about a condition that's affected your family, why don't you invest in some of the companies that are doing it rather than giving money to a charity? After all, you probably don't even want to go to the dinner, and you're going to consume half your capital that night. Not the worst biotech float would do that. In conclusion, I'd just like to say that I think these are very valuable things, and there are a number of companies that do it. Bionomics runs a pain symposium in Adelaide. AdAlta's been doing this for a number of years, and I think it's a very valuable way of raising the profile of the sector and getting more people to recognise what's going on in the science side, and that hopefully will translate onto a more developed capital market that can support many companies that are doing very valuable work. Thank you very much.
Thanks, Hugh. Maybe some people, does anyone have any questions for Hugh? Robert.
So Hugh, why isn't there a more mature venture capital market, venture capital in Australia? I mean, by all standards, Australia is a wealthy country. So why isn't there more venture capital that's filling that gap that I see between preclinical development and clinical stage companies?
I think it's very much that there is no ecosystem. to be a viable fund, you probably need a couple of $100 million. So how are you going to invest that? It becomes a real problem that there's not sufficient developed investments to take what would be a viable sized industry at present. So I think it's a process that more companies, more capital, more expertise comes into the capital side of the industry. It's not you can't sort of shove money in and hope to get a result out the other way. I think it's the development of an ecosystem that's needed.
Any other?
Just on that note, basically the sort of investments that are made in the resources industry, mining and what have you, are of a similar magnitude. I mean, if you extend a mine, say, for iron ore in the Pilbara, it's $500 million. You know, I know that because my son's actually involved as a mining engineer and he does all these things. So it's large amounts of money. And it is risky because we've seen recently what happens when the iron ore price drops, and you know, so there is a high risk associated with that, and it's an investment that you make and you've extended your mine and then the market's gone all of a sudden. Maybe you ride through the recession in China or whatever, you know. So why is there not more willingness to put more investment into biotech and medicine when I think here there's a very good base for that, because you've got very well educated scientists and doctors, very high standard. So they have to go overseas if they want to get involved with drug discovery and development. Yeah,
well, I think I mean, it took the resources industry a very long time to develop to where it is, and perhaps biotech's at an earlier stage, but it's something that's got to be built on. That you know, it's promotion of successes and development of. I think you know, for instance, I mean, Australia's got a very large capital market. Sorry, not very large, but in proportion to its size of its economy. But there's very little investment by institutional investment in specialist funds.
So they feel more comfortable with something that they've known for a long time, and
they
can assess risk. There is risk there, but they can assess it because of experience. And
or it's because it's a global industry. The investment is in recognised global operators. So. You know, if you were an Australian institution, you might give money to a Biotech Value Fund, for instance, rather than a startup local fund. But
John?
I think there is another difference in terms of the investor spectrum. At the retail investor level, pretty much everybody feels they've got a chance if they're going into resources. There are a lot of people willing to punt in resources at early stage money. A lot of it's speculative, and you get these roller coaster rides during different stages of resources.
Yeah.
There are a lot fewer retail investors who really feel that they want to try biotech. It's a different kind of population, both in size and attitude, and the perceived skills that you need to actually employ.
Yeah, that's true, but I guess that's the sector's task is to convert. What is the passion for? I mean, everybody's been, probably everybody in this room has had somebody in their family who's been touched by illness. It's perhaps playing on that to develop interest in the particular subject, in the particular thing. I think yeah, that's probably one of the most profound drivers for donations to charities is somebody being in your family being involved.
I don't
Perhaps
disagree with your point. I just think you're looking at two quite distinctive populations of potential investors outside the institutional areas.
Yeah, absolutely. And I suppose, you know, say in an ESG sense, perhaps there's a positive spin that should be placed on the sector. I mean, these are conditions that are going to, in some cases, are going to bankrupt health systems. You know, there's plenty of assessment of what you shouldn't invest in, but perhaps that should be turned around to a positive spin, to a positive bias of what should be invested in.
So a new slogan, donate to the biotech sector.
Yeah.
Isn't it with the mining sector, Australians relate, we've got BHP, the biggest miner in the world. We've got Rio, so we can relate to this, whereas we don't have major biotech companies. Right, we've got Pfizer, but it's not Australian. We've got all these Glaxo, not Australian. But the average Australian, and understandably, they can relate to us being a leader in that area. And we're not a leader in many areas, but on mining, you've got Rio, BHP, you can name Fortescue, they're top mining companies. And I think that's why the money goes to that sector.
I knew I shouldn't have mentioned the resources sector. but I mean, you know, that's yeah, we've got CSR.
Yeah.
Over the years, have you seen attempts to set up funds that are accessible to retailers in the biotech sector, and if so, why have they not happened? Why have they not worked?
Well, I think that Number has own. Bianca Ogden runs a very successful fund. I think it's okay if you're setting up a specialist fund in Australia, and you manage to raise $100 million, say. You've probably got about $1 million of revenue to play with, and that doesn't go very far. So how do you have the expertise to make reasonable judgments in some very esoteric areas, you know, that range from you know, from neuroscience to cancer to fibrosis to this to that to the other. You might have one analyst, and they've got to cover all this. There's very little support from the broking side, from the sell side. There's no specialist analysts, or very few that cover a global thing. So I think it's a matter of growth, of getting a system going, and it's an ecosystem. It's not one part. It's many parts that are required to be successful.